This video is on a stock that has a 921% cost to borrow max, that has a cost to borrow average of 810.47%, and also has a short interest of free float of 172.09%. Yes, if you guys have not gotten it already, we are going to be talking about REDBOX here in this video. This is a stock that I have not commented on yet, but I do think has a lot of interesting prospects going for it. That is somewhat similar to Volkswagen, what we directly seen in 08. Little bit different comparatively to some of the other trades that we have seen in the past. So I want to put my thoughts out there. All transparency's sake, I don't have a position, but I am going to initiate a position, and I want to kind of walk you guys through what I'm looking at, what I'm expecting for this stock here into the future, because I think regardless of, other stocks out there, there is potential in individual stocks, and I do think this is one of them, at least for a swing trade. But there is also a big negative factor of REDBOX that I do want to address here in this video. So we're going to dump a lot of information on you guys here in this video. If you guys find value out of it, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section. But most importantly, go check out the sponsors of these videos, which is Moomoo, Webull, and Public. Get yourself free stock with them, free 99. You might as well go ahead and do that. Now, let's dive into REDBOX. So how this is directly similar to something like Volkswagen and why the short interest is over 172%. It really comes down to the structure of the shares. Obviously, we know REDBOX has a lower float. REDBOX only has about 12.62 million shares outstanding. The average volume is about 16.5 million shares. Now, when you have 12.62 million shares outstanding, it's a very low float. So you could see in here, we've had firms that have been buying more and more REDBOX, right? Seaport Global Asset Management has 4.36 million shares of REDBOX. Apollo Global, 1.76 million shares of REDBOX, and it continues to go down the list. And when you add all of this together, you're looking at a very substantial amount of shares that hedge funds own of REDBOX. Now, when you add insider shares on top of that, and then you add the float, which retail investors have bought and held, that's where you can get the short interest that can explode. For an example here, we're going to go ahead and look at AMC, right? AMC, call it, we have 500 million shares outstanding. Say there was a 20% short interest, which it's higher than that, but 20% short interest, that's 100 million shares that are sold short. Well, if a big hedge fund came in and bought 250 million shares of AMC, well, the short interest is going to double because the outstanding count of shares has decreased by 50%, so the short interest is going to go up 100%. That's similar to what has happened with REDBOX. And now when you only have, in REDBOX's case, about 2 million shares that can be freely traded, it's very hard for shorts to get out of their short positions, to actually find shares to cover on their short positions, especially when there is a high degree of FOMO in the market, specifically around this one equity. That's why you have seen REDBOX on the threshold securities list for the past couple of weeks, and that's why the short interest is ultimately 172.27%. The current shares that are sold short is only 3.36 million shares. The cost to borrow max, like I said, 921.91%. Cost to borrow minimum, even at 676.91%. Now, why does cost to borrow rates go up so much, especially on a stock like REDBOX? Because that's essentially the amount that holders of REDBOX want to get paid in interest to lend out their stock. Because if you thought the stock was going to move up in between 500 and 1,000%, well, you're going to charge, in between 500 and 1,000% to go out and lend out your stock. Now, that is a very big problem for short sellers, because if they want to buy their stock back, it's going to cost a lot of money, and to even hold that short position, it's going to cost a lot of money. Now, you add into the scenario and the equation of where the markets are currently at, with the equity markets in the toilets, bond markets in the toilets, right? Real estate going down the drain. A lot of these liquidity segments of the markets, equities, bonds, real estate, they've went down dramatically. So hedge funds have a lot less money and a lot less portfolio value to put up as collateral for some of these margin calls. So when you start to get a stock like Redbox that starts to go up to incredibly high levels, and you mix all of those factors together, you're really looking at somewhat of a very explosive possible situation here. Now, on a technical basis, I think Redbox looks very, very attractive as well. You can see that we had a lot of resistance around the 200-day moving average. Even when we broke above this back in early May, May 2nd, we actually did close the day at $8.53 per share, but we did hit an intraday high of $11 per share. The next days after that, you fell right under the 200-day moving average. We could not hold above that. And then we did hit this bottom in mid-May, and then we did start a very solid upward trajectory here. You guys can see the trend line is just very, very beautiful. And we did just break above the 200-day moving average again. That was June 7th. That was yesterday. And we did ultimately close at $8.55. That was a higher close than what we seen May 2nd, and then today we did break out of a higher high than we seen intraday May 2nd and went all the way up to $11.25 per share, closing and $9.93 per share, plus 20 cents per share here in after hours, up about 2% in after hours. Meaning you're closing at the highest level that we have seen since Redbox became like a momentum kind of short squeeze trade, right? So you're closing at the highest levels, also hit a higher high intraday. So I think this is really only a matter of time before you start to see possibly 100 or multi-100% gainers in a single day, just because the dynamics here of, when you see a lot of buying, when there's a lack of ability to come up with shares, to find shares, and when there's a lot of shorts that need to cover, that can drive the price up very, very fast. So I think really everything that I'm looking at here is very encouraging. Now, this is one of those trades where you just want to be a little bit careful, because Redbox is already merging with like Campbell's Soup, I believe it is, for like 1/8 of a share or something along those lines. I'm not sure the conversion rate. It doesn't matter. It equals out to like 50 cents per share, right? So I believe there's a $10 million penalty if they were to back out of that. The total market cap of Redbox is sitting at about $107 million, about $108 million now. So it'd be about 10% of the outstanding float. So if they did go ahead and back out of that, you could see some negative pressure on the stock, but I don't necessarily expect that until this rally does ultimately, follow through, and once we actually do get some level of short squeeze in the stock. But it is a risk that could come about any day, that merger, or essentially, paying that fee to get out of that merger, which would be about 10% of the market cap, which could drop the stock about 10% as well. But I don't see that happening, like I said, until you do see some kind of squeeze event that does start to play out. Now, on top of that, you guys can see the option activity has been extremely bullish on Redbox. You could see all of these calls coming through for very large amounts of money. $1.29 million call position for November 18th at the $1 strike, paying about $923 per contract. That's a break even of about $10.23 per share. $114,000 order, almost $1 million order, $500,000 order, $366,000 order, and all of these orders are pretty much in the hundreds, if not millions of a dollar range, with like no put activity. Here's one put, a $10 put for June 17th, likely just a hedging strategy, and that was only worth about $50,000. And you can see this, the same hedge fund has long calls at the $4 strike for $217,000 and $600,000. So you're not really seeing any put activity as far as options from hedge funds. And once you start to see some of that call activity start to flip to the put side, that's where you could look at, hey, maybe we could see some negative downward pressure. But until then, it's really, really hard to say. Now, some people like evergreens, shout out to you if you are watching this video, my angry, loving follower that always hops on the live stream. If you guys are always on the live streams, then you know who evergreens is. Pretty well known fella here on this channel. He's basically calling out that, DWAC went up like 1,600% in a day. That thing went from $10 to $180 around there, and then ended out the day somewhere around, $140, and then trended downwards. And that's something similar that could actually happen with with Redbox, given where, you know, just the float is, so on and so forth, and how really we've set up in the same way that we set up with Volkswagen. I think it could be pretty encouraging. Now, something else I find very encouraging is Redbox has been moving up a lot over the past couple of days with the same amount of volume, right? Like, you have not seen a volume spike here in the last couple of days, yet the stock has went up 27.61% yesterday and over 18, almost 19% here today on just very low volume, right? So when you start to see higher volume come into the stock, that's when you could see more explosive moves. Like, imagine if we did see 160 million for volume like we seen back here May 2nd. You know, we only seen 53 million for volume here today, and you only seen 25 million for volume yesterday, and you're seeing some pretty big moves. So you get a high volume day, and this stock could easily go up hundreds of percent. Now, I do want to point out another stock that I had traded in the past not too long ago, Inspirato Incorporated. This is a stock that literally did what we just talked about. This stock was trading at a low. This was February 17th of $14.19 per share, went all the way up to 108 and then ended up closing at $92.65 per share. This is also another low float company. So I think it, you know, puts it into a little bit of context how these stocks can move up in a substantial way, like 650% in a day. Now, if Redbox did something like that, that is probably the end of that trade. I'm sure at that point you would see some holders sell out, and then the shorts would be able to cover. But, you know, still, given where the market environment currently is, it could be better than not, and I'm honestly very excited to see where this thing goes. But it's one of those trades where you could put a couple $100 on it, whatever your portfolio value is, right? If you have a $50,000 portfolio, putting $500 on a trade, 0.5% of your portfolio, not a big deal when it comes down to it, right? But if you have a smaller portfolio, you want to play things in the context of your overall size of your portfolio. It's not something that is guaranteed. It's something that looks pretty probable in my personal opinion, but you still want to play it like a high risk, high reward kind of strategy. A small amount of money can go very, very far with these kind of trades. So I don't have any specific, like, you know, prices I think the thing could go to. You know, I would really target in between $20 and $100. It's just a really wide spread there of possibilities that could ultimately happen with this stock. But I do think it looks good. I think it looks exciting, and some of the trades that I want to make on this are really targeting that July 15th expiration. If we look at even possibly the $15 calls for $100 a contract, if we do pull back maybe tomorrow, pull back over the next couple of days, and could get some of these contracts for even cheaper, that's kind of what I'm looking at. Even a $10 call wouldn't be such a bad idea in my personal opinion. Just paying a little bit more, getting closer to the money. If this thing did rocket to, let's say, you know, $100 a share on a $10 call, you'd make $9,000 on that option. So I don't think, you know, on a risk to reward basis, it's a bad deal, but it's still one of those things you want to be pretty cautious about, you know, especially in this marketplace where just people want to make back some of the losses that they've lost. You still just want to be careful. But, you know, July 15th, $10, $15 strikes in between there. That's really what I'm targeting. That's what I'm looking at, and that's probably the trades that I will make. If you guys want access to all of my trades in real time, link down below in the pinned comment. That is going to be all for this video. That's what you guys need to know if you guys found value out of it. Like I said, show the video some love, push this information out to as many people as possible. Obviously, not a financial recommendation. If you guys also want to get yourself some free stock with Webull, Moomoo, and Public, down below in the description of this video. Thank you guys for watching, and I will see you in the next one.